Most people are one paycheck away from financial disaster. Let that sink in. One missed payment, one job loss, one medical bill, and everything collapses. But what if your money worked for you while you slept? What if you woke up tomorrow with more money than you had when you went to bed, without doing a single extra hour of work? That is not a fantasy. That is passive income done right. And today, I am breaking down 7 passive income streams that actually work in 2025. Not the recycled garbage you find on clickbait blogs, but real strategies with real numbers. Stay until the end, because stream number 7 changed how I think about money entirely. Welcome back to WealthWise Daily, the channel where we cut through the noise and give you actionable financial strategies you can use today. I am your host, and if you are new here, hit that subscribe button because we drop financial intelligence every single week. Now, before we dive in, let me be clear about something. Passive income is not zero effort. Every stream I am about to show you requires either upfront time, upfront money, or both. The passive part comes after you do the work. Anyone telling you otherwise is selling something that does not work. With that said, these 7 streams have proven results in 2025, and I am going to give you the what, the how, and the realistic numbers for each one. Stream number 1, dividend investing. This is the most proven passive income strategy in history, and it is more accessible than ever in 2025. Here is how it works. You buy shares of companies that pay dividends. These are regular cash payments companies make to shareholders, typically every quarter. Companies like Johnson & Johnson, Coca-Cola, and Realty Income have paid and grown their dividends for decades. Now let us talk real numbers. The S&P 500 average dividend yield sits around 1.3 to 1.5% annually. But if you target dividend-focused ETFs like SCHD or VYM, you can realistically pull 3 to 4% yield. On a $50,000 portfolio, that is $1,500 to $2,000 per year, or roughly $125 to $167 per month deposited into your account while you do absolutely nothing. Scale that to $200,000 and you are looking at $500 to $660 monthly, just from holding stocks. The key in 2025 is dividend reinvestment. You take those dividend payments and automatically buy more shares, compounding your position over time. This is called a DRIP, Dividend Reinvestment Plan, and most brokerages offer it for free. Start small. Even $50 a month invested consistently into a dividend ETF builds a real income engine over 5 to 10 years. The earlier you start, the more time compounding has to work in your favor. Stream number 2, index fund income. If dividend investing is too hands-on for you, index funds are the set-it-and-forget-it version of building wealth. An index fund tracks a market index like the S&P 500, meaning you own a tiny slice of the 500 largest companies in America. The historical average annual return of the S&P 500 is around 10% before inflation. In 2025, with the rise of fractional shares and zero commission trading, there is zero barrier to entry. You can buy into an index fund like VOO or SPY with as little as $1 through most modern brokerage platforms. Here is the passive income angle people miss. Index funds generate income through both price appreciation and dividend distributions. VOO, for example, distributes dividends quarterly. But the bigger play is total return. If you invest $500 a stream number 3, high-yield savings accounts and money market funds. I know what you are thinking. A savings account is not passive income. But in 2025, with high-yield savings accounts offering between 4.5 and 5.5% APY, this is absolutely a legitimate income stream for your emergency fund and short-term cash. Think about it this way. If you have $20,000 sitting in a traditional bank savings account earning 0.01%, you are making $2 a year. Move that same $20,000 to a high-yield savings account at 5% APY, and you are earning $1,000 a year. $83 a month for literally doing nothing except switching banks. Money market funds go one step further. Funds like SPACX or VMFXX, available through brokerages, are currently yielding around 5%, and your cash remains liquid. This is where you park your emergency fund, your house down payment savings, or any cash you will need within 1 to 3 years. Zero risk to principal. Consistent monthly income. And it takes about 10 minutes to set up. Stream 3 is not going to make you wealthy, but it stops inflation from stealing your savings while you build the other 6 streams. Pattern. Interrupt. Quick show of hands in the comments. How many of you still have money sitting in a big bank earning less than 1%? Drop a number below. I read every comment. Stream number 4, real estate investment trusts or REITs. You want real estate income, but you do not want to be a landlord dealing with 2 a.m. maintenance calls and difficult tenants. REITs are the solution. A REIT is a company that owns income-producing real estate, apartment complexes, shopping centers, data centers, cell towers, and by law, they must distribute at least 90% of their taxable income to shareholders as dividends. This means REITs historically have some of the highest dividend yields in the market. In 2025, top REITs like Realty Income, commonly called the Monthly Dividend Company, are yielding around 5 to 6%. Buy $10,000 worth of Realty Income stock, and you are receiving monthly dividend checks directly into your brokerage account. Digital infrastructure. REITs focused on data centers and cell towers have become especially powerful in 2025 due to AI infrastructure build-out. Companies like American Tower and Digital Realty are positioned at the intersection of real estate and technology growth. You can buy REITs as individual stocks or through REIT ETFs like VNQ for diversified exposure. The tax treatment on REIT dividends is important. Most REIT dividends are classified as ordinary income, so consider holding them inside a tax-advantaged account like a Roth IRA when possible. Stream 4 gives you real estate income without a mortgage, without stream number 5, digital products and online content. This is the most scalable passive income stream available to anyone with knowledge or a skill. Here is the formula. You create something once. You sell it infinitely. No inventory, no shipping, no extra work per unit sold. In 2025, digital products can include ebooks, online courses, Notion templates, Lightroom presets, financial spreadsheets, stock photography, and music licensing. The creator economy has matured, and the tools to monetize. Before we get to streams 6 and 7, I want to tell you about 2 platforms that make streams 1 and 2 dramatically easier to start. First, Acorns. If you have never invested before or find the whole thing overwhelming, Acorns is built for you. It automatically rounds up your everyday purchases to the nearest dollar and invests the spare change into diversified portfolios that include dividend-paying ETFs. You spend $4.60 on coffee. Acorns rounds it to $5 and invests 40 cents. It sounds small, but users who started with Roundup stream number 6, peer-to-peer lending and private credit. In 2025, platforms like Fundrise and YieldStreet allow everyday investors to access private credit deals and real estate debt that were previously only available to institutional investors. You essentially become the bank. You lend money to real estate projects or private businesses and earn interest payments. Fundrise's income-focused portfolios have targeted and delivered yields in the 8 to 12% range. The risk is higher than index funds. These are illiquid investments, and you should only allocate money you will not need for 3 to 5 years. But for the income-to-risk ratio, private credit is one of the most interesting asset classes of 2025. Allocate 5 to 10% of your portfolio here as a diversifier. Stream number 7, and this one surprises people every time. Licensing your skills and assets. If you have a skill, a photo, a piece of music, a design, or even a font, you can license it and earn royalties indefinitely. Stock photography sites like Shutterstock and Adobe Stock pay contributors every time someone downloads their image. Musicians earn royalties through platforms like MusicBed and Artlist. Designers sell fonts and templates on Creative Market. The licensing model is pure passive income. You create the asset once, you register it, and you collect checks. One well-positioned stock photo can earn 25 cents to $5 per download, and popular images get downloaded thousands of times. Scale that across a catalog of 500 images, and you have a meaningful income stream from photos you took years ago. Now here is the bottom line. You do not need all 7 streams to change your financial life. You need one, executed consistently with money reinvested and compounded over time. Start with the stream that matches your current resources. Have $500? Start with a high-yield savings account and an index fund on day 1. Have a skill or knowledge? Build a digital product this month. Have time but no money? Start creating content on YouTube or a blog and let it compound. The gap between where you are financially and where you want to be is not luck. It is systems. These 7 systems, built one at a time, are how ordinary people create extraordinary financial outcomes. If this video gave you even one actionable idea, subscribe right now because we release financial strategies like this every week. Drop in the comments which stream you are starting first. I personally reply to every comment in the first 24 hours. And check the description for all the tools, platforms, and resources mentioned today, including those Acorns and Robinhood links. Your future self is built by the decisions you make today. Make one good one right now. I will see you in the next video.